Hello YouTube and welcome back to another episode of Invisible Head Investing. I'm the Invisible Head Investor, and today we're talking about a Spac that I haven't really heard anybody else talk about, listed at less than $11 per share. So before we get started, hey guys, if you want to get some free stock, click on the link below and create a new account with Webull. You get 2 free stocks worth between $2.50 up to $250 just for creating an account. Now, if you deposit $100, you get an additional 2 stocks worth between $8 and $1,600. That's a pretty good return on your investment. Thanks for supporting the channel. Now let's get back to it. Okay guys, welcome back. So today we're talking about Red Ball Acquisition Corp. This is a SPAC that's listed at $10.86, which I think is a really good deal. And the reason I think it's a good deal is because when you invest in a SPAC, the most risk that you're facing is whatever you're paying over $10. So in this case, if we were to buy 1 share of Red Ball Acquisition Corp, the most risk that we would be facing is 86 cents. SPACs normally don't drop below their initial value when they come out or when they're released, and most SPACs come out at a $10 value. Typically, a SPAC has 2 years to find a company that it wants to merge with and complete the merger. If that SPAC does not complete a merger within 2 years, then the $10 per share goes back to the investor. So if you can get a SPAC at or as close to $10 as possible, you're really limiting your risk and you're really opening up a wealth of opportunities depending on which company that SPAC is going to merge with. We've seen other SPACs come out recently. The most famous one is probably Nikola. When its reverse merger was completed, that stock rose all the way up to $90. Now, a lot of you in the EV sector or following the EV sector know what's happened with Nikola, all the potential fraud allegations, the investigations going on by the SEC and the Department of Justice, Trevor Milton stepping down, all that stuff. We know what happened in the stock. It's in its teens now. But that's not the norm. Most times when SPACs go through a merger, it's with legitimate companies. A lot of these companies go on to do very well. DraftKings was one example. That stock is trading just under $50 right now. Spac, Virgin Galactic, that stock is in the mid-20s. Lordstown Motors, that stock is in the mid to high 20s as well. I mean, a lot of these companies that do reverse mergers go on to have higher values than what the initial SPAC offering is, and you can see them 2x, maybe even 3x relatively quickly. I'm not saying that this stock is going to 3x or 2x as soon as they merge, but the possibility is there. Now let's take a look at which company Red Ball Acquisition could potentially be merging with. This SPAC is getting ready to potentially merge with Fenway Sports Group. Fenway Sports Group is the owner of the Boston Red Sox, as well as Liverpool FC, Roush Racing, and they own a large percentage of NESN, which is a local New England cable network, and 2 sports stadiums with Fenway Park and Anfield Stadium in Liverpool. These guys have a lot of assets, and I think that they're looking to merge to increase brand awareness, to generate some more money for investing in the teams, investing in the stadiums, creating a better fan experience. I mean, they're going to have a lot of options when they raise all this money. The deal being discussed would merge Fenway Sports Group with Red Ball Acquisition Corp. and will value the owner of the Liverpool Football Club at around $8 billion, including debt. The newspaper also said that Red Ball, which raised $575 million in August to buy businesses in sports and sports-related media and data analytics, plans to raise an additional $1 billion to buy a stake in Fenway Sports Group that will not exceed 25%. Now, I'm really excited about this. I mean, like I said, I'm from New England. I grew up a Red Sox fan. I've been a Red Sox fan for over 30 years. And I'm really excited about this because I think it opens up a wealth of possibilities, not just for the Boston Red Sox and Fenway Park, but also the other acquisitions that the Fenway Sports Group owns. It's going to help the company build better branding and promote the teams, create better merchandise potentially. I mean, who knows what they're going to invest this money in, but I think taking the company public is a great opportunity for sports fans in general to own a piece of the Red Sox and a piece of Liverpool FC. So let's take a look at FSM, which is Fenway Sports Management, and kind of see what they do. FSM serves as the sponsorship sales arm for Fenway Sports Group prestigious sports portfolio, including the Boston Red Sox, Liverpool Football Club, New England Sports Network, which is NESN, and Roush Racing, which is another branch of this that if people that are into racing, I know racing is pretty popular, especially in the southern part of the United States. FSM is an exclusive marketing agent for LeBron James through a strategic partnership with LRMR. This is pretty big too. I actually did not know this, but LeBron James is probably the greatest basketball player playing today, and he is building out his brand. He's getting into movies and television production and stuff like that. So to have a partnership with somebody like that who has a massive career beyond his basketball years shows a lot of potential and growth for this company with this partnership. They also do consulting and events, Fenway Park special events. Let me tell you guys a little bit about Fenway Park. Fenway Park is the oldest baseball stadium in America right now. There were talks that when this ownership group took over the team back in 2003, I believe, they wanted to build a new stadium in Boston. That didn't happen, so they spent hundreds of millions of dollars in this ballpark to create a better fan experience, to create more seats, to make it a great place to visit with your family, your friends. And I've been there several times, and I really enjoy going to Fenway Park. It's a great time, great atmosphere. It's an experience like not many other places that I've been. They also allow people to go out on the field and do tours of the stadium, which is pretty cool. I mean, this is an area where, if you're a baseball fan, Babe Ruth came up with this team before they were sold to the Yankees. So to be in an area where Babe Ruth played, I mean, just the history itself is insane and unbelievable. So Fenway Park holds a special place in my heart, as well as many New Englanders and other people across the country, New England transplants. Again, this might not be the best stock or might not hold as much interest like maybe the EV sector right now or the cannabis sector. But if you've ever wanted to potentially own a piece of a sports franchise, this could be the way to do it. Through this Spac merger, that could potentially happen. You could potentially own a piece of the Boston Red Sox or a piece of Liverpool FC or a piece of Roush Racing or a piece of a television network, that being NESN. So if we look back at the chart, like I said earlier, we're at $10.86 per share. Where do I see this stock potentially going once the merger is coming close to a merger date or once the merger is completed? I think this stock, I mean, again, there's probably not going to be as much excitement for this stock as there is for some of the other SPACs out there that are merging with, medical companies or EV companies or other companies like that. So I think this stock could potentially go up 50%, and I think that's pretty conservative, with the potential to go even higher as time passes. I don't see this stock tripling in value in 3 months or 6 months like some of the other reverse mergers that we've seen, but I think it's a really good buying opportunity. The risk is relatively low in this SPAC, and if you're looking for a modest return of maybe 50%, in 6 to 12 months after the merger, I think you have a really good possibility over here. And you can brag about potentially owning a piece of a sports franchise that maybe you're a fan of. So, guys, leave a comment down below. Let me know if you're interested in a SPAC that owns a sports franchise. Let me know if you're a Boston Red Sox fan. If you are, high five. Or if you're a Liverpool FC sports fan or a racing fan even. And let me know if this is a SPAC that you're interested in investing in. I will take up a small position in this SPAC for the time being. I want to verify that the sports merger is going to go through. And then once it does, I'll probably take a larger position. Nothing too extravagant, but probably triple-digit shares because, again, I'm partial to what this company owns. I'm a big fan, have been a big fan for a long time, and to me it would be kind of special to say that I potentially own a piece of the company that owns one of my favorite franchises. So, guys, thank you for watching. I'll see you guys in the next video.